Welcome back to Trading 360. I'm Diane King Hall. Before we get into the big three, I want to give a big shout out to my colleague Alex Coffey, who has been holding us down this hour. All right, time now for the big three. 3 stocks, 3 charts, 3 trades. Rick Ducat will take us through the charts. And here to take us through the trades, we've got the one and only Kenny Polcari, senior market strategist at Slate Stone Wealth. We always love when we have Kenny on. All right, Kenny, before we get to the charts and the technicals, tell us about the first one on your list, Dominion, ticker D.
Right. So this is clearly about 3 things. It's about its dividend, which pays you about 4%. So in terms of a growth or an income investor, you want to think about this name. This is about clean energy, and it's about AI demand. Those 3 issues are the reason that I like Dominion. We like Dominion. I own Dominion. And so the story is just about that. It's going to be the AI demand. They are the biggest supplier of energy to one of the biggest data centers. I think it's in Northern Virginia, and that demand from that data center alone is expected to double in 10 years.
Okay.
And so they sit right at the heart of that, in addition to other clean energy projects that they're producing. So this is clearly a clean energy and a dividend story.
Okay, clean energy and a dividend story. Rick, I'm going to yield the floor to you and tell us what you see when it comes to the chart for Dominion. I know it's got a slim gain for this year.
Well, you know, a lot of these more defensive type of names have come back into prominence lately here. And I might add, too, AI uses a ton of energy, so something to consider as well. So when we look at this chart here, you can see there's this shaded area here. And that was a point of many significant lows here for this particular stock. This comes in around 54 or so, 53, around that general area. We had our tariff news-related downfall here, like so many other stocks, but the ship has mostly been righted so far. We're pretty much back close to where we were before everything happened. We are above the confluence of all 3 of our moving averages that we follow. So this gives us a very convenient downside point to watch near 54 for potential support. Price does seem to be poking its head above this downward sloping trend line that we have here, starting with these highs near 62. If we were to move higher, we can take a look at our volume profile and standard deviation channel studies. We can see here this level I mentioned earlier, this level of our moving averages sits very close to a major volume node, our point of control. So 53 to 54, key supportive area to watch. To the upside, recent highs line up with the next volume node near about 57. So a couple boundaries to keep in mind.
All right. Thanks a ton for a breakdown of that chart for Dominion. All right, Kenny, next on your list, you've got Palantir. It has had a huge run this year.
Right, and it's pulled back a little bit, and it's just a name that you've got to be in, right? Partly because of the space it's in. Look, they just reported their earnings. They had blowout earnings, but apparently the street wasn't happy because they weren't good enough, and they sold the stock off on the day that they, last week, earlier this week, or last week.
This week.
Yeah, this week. And so they sold off. I thought it was clearly an overreaction, but look, the stock has taken a hit like everybody did in April. It's making its way back. Their earnings were great. The fact is that everyone's worried about government spending and Palantir is going to get hit. But look, Palantir is almost mission critical for the U.S. defense industry, and so therefore I don't think they're going to start eliminating Palantir by any stretch. And just from a tech perspective and an AI perspective, again, that's the reason you want to own Palantir. And while it's up, it is off its highs. It is certainly pulled back. I think it's up again today, but
it is.
I think it's up again today. But the market's up, right? And there's kind of good news in the market. But I think it's just a name. We like it. We own it, and it's a name that we'll continue to own.
No, you make a good point about it's
mission critical for defense. It's not going to. They're not cutting Palantir.
Okay. Yeah. I mean, look, government contracts do tend to be sticky. So, and even with the DOGE cuts, there was talk that they were actually needing more use from Palantir.
Right.
Kenny.
Right.
All right, Rick, the floor is yours now. Take us through what the chart looks like for Palantir.
A stock that's made a pretty rapid recovery after being halted at these double top highs. You can see we had here 125.41 was our previous high. That's about where we stopped before we had our earnings. We had what felt like a rather steep drop off here that took us to our yellow 21-day exponential moving average, which was near about 105 or so at that time. But here we had an old high point. We broke above it. Now it's a low point to consider. So 109, 110 around that general area is supportive. We also, if we were to move even lower, though, highs, and then 63-day EMA come in around 95, 97. That general point as well could be supportive. We can see that momentum has been interrupted. We have broken below our green upward sloping trend line on the RSI, but we have so far remained above the 50 midline. So still more of a bullish tilt to momentum, still very close to our highs and showing some strength here today. We can see when we look at our volume profile studies here, the area right around here, that's the only standout area in the near term. So right around 111, 112. Really most of the volume anywhere close to current price activity comes in around 85 or so. So that's the heavy trading area.
All right, and then, all right, so that's a look at Palantir. Again, strong momentum so far this year. Kenny, last on your list, you've got Honeywell. Yep. Now, look, it has underperformed the S&P 500 a little bit this year.
100%
What are your views here?
100% it has, but it's kind of in the industrial space. Look, they just reported their earnings. They beat on their earnings. Their revenues are up. The earnings beat by 13%. I think the revenues are up by 9%. There's a restructuring going on there, and they gave very positive forward guidance. And so I think it's a core name in the industrial space that I think has underperformed, and so therefore I think that's the longer term opportunity.
Okay,
and look, and the street is all upgrading it. They've got price targets that are up almost 30% from where it is today. And so I'm in that camp. I think it's a great name to have as a core name in your portfolio.
Okay. All right. So I just mentioned the year-to-date performance, Rick, but I know you often zoom out past that. So what do the technicals look like for Honeywell?
So this is one that has also seen a rather pronounced downward slide, but like our first chart, we have broken above that trend line. We've broken above the confluence of our moving averages here. So we had all three clustering together between maybe 207 to 210 or so. Clustered moving averages suggest weak directionality. So in this case, we had big swings in price that made it so the moving averages weren't really making a clear direction. And we also had this range-bound series of activity here that we have now fought our way back into. So even though we are out of the woods in terms of these lows that we hit near 179, for now it seems like we still have yet to crack this area here, this red line bottom point before we had a gap downward and then another high point. So 220 remains a point that the bulls would want to take out here. Momentum above the 50 midline, so more bullish as well for this name. And when we include our other studies, the standout areas in terms of volume, well, right here lines up with our moving averages. So we have another important confluence here. So around 210 to 205, a key point to watch to the downside. To the upside, if we were to break through and fill that gap, the next volume node comes in right about here near 226, pretty close to the +1 standard deviation channel. So that could be an area to look for price to consolidate or slow down potentially.
Kenny, I'll yield the floor back to you. Any final thoughts on Honeywell, Palantir, or Dominion?
No, listen, I think they're all great names. I think they're all core names that, long-term investors should consider, right? Because Dominion, because of its dividend play, as well as what it's going to produce for data centers. Palantir, just because of its role in the AI space, as well as government contracts and their guidance, which is upgraded. And Honeywell as well. They've upgraded their guidance, very positive on forward guidance. And I think it's a core industrial name. And once it breaks out above 220, I think it's off to the races. 220
is the level to watch out for, breakout from. All right, that's Kenny Polcari, Slate Stone Wealth, and our thanks, of course, to our very own Rick Ducat, lead market technician. Thanks, Kenny.